Dear viewers, I wish you a happy new year 2026, and of course we all hope that it will be a great year for the markets, including crypto and coins, of course. In any case, we have already seen a brilliant start to the new year. So far, every day in the new year 2026 has ended on a positive note for Bitcoin, and that's exactly what we'll be talking about in the next few minutes. We'll be discussing altcoins, Bitcoin, of course, and how things might continue after this encouraging start to the new year 2026. And we'll be doing that together with Oliver Michel from Two Centers. It's great to have you here, Oliver.
Hello.
Of course, I'd also like to wish you a happy new year, and the year has started off pretty well. I already mentioned it earlier. We've seen in the last few days that Bitcoin is approaching the $95,000 mark. Altcoins are also doing well. Did you expect this at the start of the year or at the turn of the year?
Hey Johanna, in the last 3 interviews, we said that the bottom might have been reached, and then we saw a nice sideways movement. And now at the beginning of the year, I also said that we would have to wait a few days for something like this to develop. At the beginning of the year, then 5 green days, which brought us into a pretty good range. And today we simply have to see what these 5 days were worth, because the next few days will show that.
Between Christmas and New Year, things were actually pretty quiet. We did our last interview on December 30th. That's when you mentioned several times that we still need to be patient and that the next few days will bring something. The only thing that was really nerve-wracking was the US military intervention in Venezuela and, of course, the capture of President Nicolas Maduro. However, the whole thing has left virtually no mark on the market, both the stock market and the crypto market, quite the contrary. We are seeing a jubilant mood everywhere, not because of this operation, but because stocks are rising overall. However, the focus this week, including yesterday's start, will be more on the economy and on economic data. Yesterday we already saw ISM production data. How did they turn out?
Yes, this week will be quite a lot. Input generated for the Fed to make a decision at the end of the month. As you mentioned, yesterday we had the ISM, the Purchasing Managers Index, the Institute for Supply Management, a private organization, surveys purchasing managers and compiles a corresponding index asking questions such as how are prices looking, how is production looking, what's the situation with sales, and then a corresponding value is calculated. If this value is greater than 50, then they say yes, the economy is growing. If this value is less than 50, then we speak of a decline, and 50 is the neutral zone. Yesterday, the result for December came in at 5. The expectation was 48.3, but it came in at 47.9. So people were a little disappointed because there are quite a few people who say that this is actually the economic cycle, that this is the indicator for the economic cycle. And we also discussed in detail in our Telegram service that there are some very prominent crypto specialists who say that they ultimately base the price development of the coins on this ISM PMI. And if the ISM PMI goes above 50, then Bitcoin and the altcoins will also go up massively. That's not the case at the moment. We'll see how it develops over the coming weeks. Nevertheless, 47.9, Johanna, the economy is cooling down, quite obviously, and that in turn is, of course, an opportunity for the Fed to say, well, we need to give the economy a boost. We have to lower interest rates, and to put it bluntly, we have to print money and pump liquidity into the market. The focus is quite clear, as the minutes of the meeting show, at least as far as the FMC meeting is concerned. These days, the focus is clearly on the labor market and the economy. That is what the Fed is looking at. And to combat this, it has precisely these 2 options: lowering interest rates and printing money.
The initial data, or the first significant data for the year 2026, has been rather negative for the economy. However, there is still some data to come this week, including from the labor market. This could provide further clues as to the Fed's approach.
Yes, absolutely. Friday will be very interesting. On Friday, what we always watch will be published, the job report with the NFP and the unemployment rate. We also have ADP non-farm employment. This is also a private company that basically does payroll accounting and, based on the payroll accounting, provides an initial indicator 2 days before. The NFPs are published, showing what the NFPs might look like. And in between, we also have the job openings. So there's a whole lot of labor market data coming in, with the highlight, of course, being the unemployment rate, which has risen very, very steadily in recent months, just as we predicted. Of course, we can also wait for the revision for the last few months. That will be very interesting and may add fuel to the fire. For those who say we need to do more for the economy, that interest rates need to be lowered and cannot remain where the Fed watch tool currently sees them, namely at 28.1, meaning that everything will remain the same at the end of the month. Last week, I think we had 84%. Yep. Now we're at 83% that everything will stay as it is, and that a first cut may not come until April. We will see. The data that is now slowly coming in for December, both ADP and NFP, and the unemployment rate may be there because of the Fed and the FOMC, the corresponding committee, are giving guidance on what they should do, whether they should perhaps proceed a little faster than they had previously intended.
What actually received little attention on the market was the US military intervention in Venezuela and the capture of President Maduro. People were watching closely to see how oil prices and oil futures would develop, because we know that Venezuela has the largest oil reserves, at least in terms of the country itself. Among other things, there were allegations of drug trafficking, but of course there was also some concern that the markets would react, especially with regard to the price of oil. However, what we have seen is that the opposite has actually happened, at least as things stand at present. And one gets the feeling that the markets are now perhaps even dismissing all these geopolitical crises and political upheavals, that they have become accustomed to them. We've had to deal with one or two political crises. At the moment, we're definitely seeing record highs, even behind me. I just took a quick look. We're close to 25,000 points on the German benchmark index. Of course, that's not decisive or indicative for our cryptos, but it is for the US indices. And things are looking positive there at the moment too. We're starting again today with the Russell 2000, which represents the slightly riskier, smaller investment opportunities on a broad scale. Is it going up?
Yes, it's going up. Maybe not at the speed I would have liked and imagined, but it's going up, and that's what matters. We're seeing the latest all-time high here. That was shortly after the FOMC meeting announcing the interest rate cut. After that, things cooled down a bit. We then had another corresponding upward movement with a further correction, and we said last week that this correction should not actually fall below this or below that. Fall to a higher low, because otherwise a lower low will form. Now, as you can see here, the bottom has formed a little below in this small correction, and I would simply interpret that as an A, B, C correction, with C still above the all-time high, the 21 all-time high. That's the one line that has been running through here for ages. And yes, we basically saw these two nice green candles in the new year. So the beginning of the year was also very good for the Russell. This morning, when the chart was made, it was still green, but then around 8:30, it turned red, and we'll have to see how the day develops. But I'm assuming Johanna, and that's what this picture shows, because the picture is well known, we've been carrying it around for weeks, that here, in my personal opinion, is the final movement towards an all-time high of 2007, 2008, 2009 points, which we will now see in the next 3, 4, 5 weeks. So as we say, everything can happen very, very quickly now. But nevertheless, in order to start this upward trend, as you can see here, this resistance must be overcome. And right now there's the rattle when it goes through there, and when it goes through there at full speed, then we're on our way to the final all-time high.
There was definitely a surge in the US indices, although not all at the same pace. However, we saw a significant upward push in the Dow Jones, S&P, and NASDAQ. We saw the Dow reach a new all-time high. For the S&P, it's been a little while. And we're basically still waiting for the NASDAQ and the Russell.
Yes, we use this image to make it clear again and again that we have almost reached the end of the flagpole. There isn't much flagpole left that we still have, and We've seen, as you just mentioned, that the S&P, which is the green arrow, hit 2 all-time highs around Christmas Eve, and on according to our calculations, on Boxing Day, and then fell back a little here, as we also saw with the Russell, but has recovered quite well again. And here, that's the target, I'd say, between 7,500 and, if everything goes really well, 8,000 points. So here too, we are in the final movement. And who would have thought, which I never would have believed possible, which is why it's marked in red on the schedule, DAO also posted a fantastic, spectacular all-time high yesterday. So you can see here that it has pretty much broken through the previous all-time high. The movement is there, but the final breakthrough is still missing. And you can see here on the Nasdaq that it has also undergone a stronger correction. So those were always corrections here. It has continued to fall. If you look at the retracements, the Nasdaq still needs to pick up speed a bit, but you can see here in which daily dimensions it can then catch up at the appropriate time. If we look at the final all-time highs for the Russell, the S&P, and the Nasdaq, leaving the thumb aside, we're still looking at 10% to go, i.e. 10, 11, 12, 13%. That's what I personally think is still possible. We also need to be aware that we have reached the end of the line. As I said, every higher high must be a new all-time high, because otherwise rollover is inevitable. So the pressure is on the major indices, and it is perfectly clear the moment a rollover occurs here in the US indices, then it will also happen with cryptocurrencies. We described this on our channel, that at the last all-time high, Nasdaq, Bitcoin, and the altcoins reached their all-time highs, their final all-time highs, within a period of 2 weeks. So based on that, the statement that when they do a rollover, when they have seen their final all-time high, then the cryptos will do the same, is at least what the last 2 peaks, underpinned by the respective bull markets, unterliegt.
In order to meet the schedule and the overall plan, however, the dollar should fall. To this end, we take a look at the DXY, which has also lost some of its strength recently. It is then naturally assumed that there will be a shift away from the dollar in riskier assets. Yesterday was a bit of a day that could have made you sweat, wasn't it?
Yes, that looked kind of strange yesterday. And while we want to see the US indices rise to their final highs, all-time highs, we naturally want to see the DXZ move downward. And we had such a nice trend following lower lows and lower highs recorded here. And yesterday, at the start of trading, you can see the long wick of this candle, and you can see that the candle was higher than this lower high at its peak. So, in the classic sense, no new lower high was actually formed. Fortunately, over the course of the day, everything turned around with what we consider to be a fantastic intraday reversal, resulting in a nice red candle, which then continued here as well. But the goal is quite clear. It won't happen in 2 or 3 days, but the goal is clear, synchronous with the US indices, synchronous with, and you can see that here, the counter movement of DXZ and Bitcoin, which we have discussed in detail. In the next few weeks, February, March, that will have bottomed out. The DXZ will have bottomed out, and the US indices and our coins will have peaked. And then the opposite effect kicks in again, but in the opposite direction, one upward and the other downward.
Bitcoin is also currently trending upward. Yesterday, we saw that we had approached the 95,000 US dollar mark. The range is around 84,000 to 94,500. And yesterday, it looked as if we were about to break out of this range.
Yes. When you sat in front of the screen and watched it, then you hoped it might happen, but you knew it wouldn't. We originally had a batch, which we turned into a range, and you can see that this range is holding up quite well. we set the 94.5 twice. We have the 84 here, and yesterday you could see that it was running. I observed this in the chart. It was running towards the 94.5, 94.6. And it was clear that he wouldn't get through with that speed and pressure. And that's exactly how it turned out. The candle is now a little redder because the chart was created at 6 o'clock this morning. So you can see that it has bounced off. First statement, what we have developed here, namely the statement that we are in a range, is, I believe, confirmed by this. Second, the folks at Coinborough are really into the CME gap. They say there are 2 CME gaps open. We talked about CME gaps from the weekend to Monday. As a rule, the CME gaps of the last half to 3/4 of a year have all been closed, and the CME gaps are between 88.2 to 88.8 and from 95 to 91.6. And yes, there is a certain high probability that they may still close. This means that if nothing unusual happens now and things continue to move forward at a steady pace, we may return to closing the CME gaps. And then we'll be back in the middle of the range, and then the decision will be made. Do we test the lower edge again, or do we go up? So from that point of view, it's an interesting time at the moment. It's quite clear that we have a very important aspect here. The last higher low relative to this higher low, which is higher. We have the downward movement. You can see here that the trend has broken, the downward trend, if you wanted to work with a trend line, and we are currently on the way up. And that is basically exactly as we said it would be. We're having a great few days down here, but Johanna, it's decided there's still a long, long way to go. Yes, it can bend here now, it can go through. And if that's the 1 and that's the 0, we still have our 618702 and 786 retracement here, where you can run and bend before it possibly, if all goes well, goes through to the top. But here too, in conjunction with the US indices, everything can happen relatively quickly. Cheap liquidity is what counts. The USN is pulling, and the DXZ would have to fall, and then we would have a good movement. But I think the probability that we have seen a next higher low relative to that is relatively high. But nothing is impossible. It could also fall. However, I am clearly on track for a continuation up to a final all-time high of between $140,000 and $150,000.
Let's take a look at the weekly view for Bitcoin. The upward trend is intact. We just looked at that, and the RSI should rise accordingly.
Yes, that is actually our most important chart, the weekly chart. The key question, as you already mentioned, is the trend still intact? We define the trend as higher lows and higher highs, and it has not yet been disproved that this could be the next higher low. For now, we will simply assume that this is the case, and in this respect, the trend is still intact. And now we have seen these 2 green candles. These are last week and the week that has just begun. And as we hoped, we said that we are relatively low in the RSI, relatively speaking, compared to the last bear market. We discussed this in detail last week, and we said last week that with 1 or 2 good weeks, could the RSI, which measures the strength and speed of a price movement, go up. And that's exactly what it did here at this point. You can see this upward snippet. And I had also explained several times that this is exactly the final movement, namely towards this line. You can see this divergence between the RSI and the price. One is moving up, the other down. I assume that we will move up to this point at most. So still, 7, 8, 9. Candles left, and then here too, at Bitcoin, the event has come to an end.
What looks so positive in the daily and weekly charts changes abruptly when you look at the monthly chart. There's no sugarcoating it, especially the last quarter of last year. All 3 months are colored red. Well, as I just said, we've had a very positive start to the new year so far and have a green January candle, but the last quarter was devastating for Bitcoin.
You said it, the last quarter was Bitcoin's second worst quarter ever. The worst was the fourth quarter of 2018. I think that was 3 times as bad. So from that point of view, there's nothing to sugarcoat. These are the 3 red candles we see here. And while the weekly chart is still very positive, we have a trend following. The trend is intact. The RSI is going up, so strength is returning. But the monthly chart looks a little different. And in the monthly chart, I have summarized the 2 main arguments of the bears once again. MACD has turned red on a monthly basis. Yes, that was the case here. We were in a bear market. That was the case here. And it is also the case here that the analogy drawn in the market is quite clear. What happened here was that we had a high, the MACD turned around in this brief recovery. According to the bears, is what we may still see here now before it then goes downhill as it did here. There's nothing to say against that for now. That's just how it is. And if you combine that with the 50 SMA weekly, which is that red line, that we also have in the weekly view. So MACD is monthly, and I've set SMA here via trading view of weekly so that you can see it. And then you can see here how it hit the weekly before it went down. That's exactly what you would expect here. So from that point of view, MACD monthly rot, i.e. bear market below SMA 50, weekly, i.e. bear market. These are both arguments that cannot be dismissed. That's not a question at all. But there are also a whole host of indicators and arguments that speak in favor of this.
That it's different.
Dieses Lager,
I agree. We also had an all-time high before having this time, and so many things have turned out differently in this cycle, let's say, that we can safely say that this time, even if it sounds like a cliche, this time things could be different. Especially since we have really picked up momentum again. We had $471 million in inflows into the spot Bitcoin ETF on Friday and almost $700 million on Monday. So that's great. And I would like to see 2 or 3 more green candles at the top, and then I think it's over. But here, that's basically the picture painted by the bears. The page before that showed a picture of bulls in connection with the statement liquidity and cheap money. So, as I said at the beginning, Johanna, there are many arguments for and against it continuing. And you just have to look at it day by day. Keep a close eye on it, be careful, and consider whether this time it's the same as before or whether it's different. And then decide.
You're hoping that this time everything will be different.
That's why it's there.
Altcoins have also performed quite well in the early part of 2026, keeping pace with the upward trend at the start of the year. We start with number 2, Ethereum. Here, at least for now, it has regained the $3,000 mark.
Yes, just as quickly as it was conquered here, it was lost again. So, the moment of Bitcoin fills the gaps we just talked about, you can assume that I will see it fall below 3,000 again. There's no question about that. It's just a boring story. Even if some people find it nerve-wracking, it's still boring. We know this green range has been running for over 2 years. And after 2 years, we are still right in the middle of this range. And even though the first few days were nice and things picked up and everything on the watch list was green, which was reassuring, that didn't change anything. We are here in no man's land, the dump money zone, as I always say. And the first thing that needs to happen, of course, is that we have now reached 3,000. We are at 3,002 and a few cents. But what is important is this red line, i.e. this. These are the lows that have been written, the lower lows, and somehow it would make sense to get a significant statement from East so that he goes over this and removes this lower low so that we can say, okay, this is a movement. Then in connection with this movement, he's at the 7 and 2 retracement, which is the 21 all-time high that he briefly touched here. And then you can say that he can tackle the 786, and once he's through that, there's a good chance that he'll continue to rise. But now we just have to wait for Bitcoin, wait for the eyes. But nonetheless, Johanna, the votes in the market are right. They're really loud. Ethereum will quickly surge to $9,000. If the Clarity Act is passed, we have discussed this in detail. The Clarity Act ultimately provides a legal framework on the basis of which all financial service providers can say, now we can take action too. And that would bring incredible momentum to this market. The Clarity Act may be finally passed by the Senate in January and signed by Donald Trump. And if that were to happen in January, that would be fantastic. Because then the legal basis would be in place. The market anticipates before many things are implemented. And then the momentum generated by the Clarity Act would fit in perfectly with our time horizon before we expect the rollover to take place.
Oliver, whatever made you sweat yesterday or caused you to sweat with the DXY should have appeased you again with the XLP. That's because it has been on a steady upward trend over the last few days. It has also regained its position on the winner's podium. In terms of market capitalization, it has overtaken Binance again, and at Ethereum, it currently looks like, at XRP, it currently looks like it is performing significantly better than the rest. Where is this positive momentum coming from?
Yes, we performed worse before, so it's only fair that we perform a little better now. While Bitcoin and Ethereum were moving sideways, our XRP, as we always say, approached the lower end, holding the range between 180 and $2. That was the range we kept coming back to. Mentioned, so he held on to it, and now possibly the market has also thinned out a bit due to the brutally successful spot ETFs on XRP. There is still not a single outflow day. All are inflows, which ultimately means that the coins are being lured away from the market. Supply is reduced, demand remains, and this may be one of the reasons why prices are rising so steeply here. But here too, it was of course great to see this in the portfolio, and you can see that his XRPs are multiplying with a price increase of 30% in 6 days. That brightens up any portfolio. But here too, you have to be completely honest with yourself. This movement alone, this 30% in 6 days, is worthless unless the range between these two here, i.e. the inked lows, is eliminated and you go above it and relative to these lots achieve a higher point, describes. That means between 250s and 270s. There is a range that XRP has to cross, whether you like it or not. Before that, everything is just nice to look at, but it will only become truly sustainable when we enter this range. And then we will also be relatively well through the retracements on the way up. And in my opinion, this will also become apparent in connection with Bitcoin and Ethereum in the next few days, how far it will go down again before it goes up.
We omitted Bitcoin dominance from our last interviews because there was simply nothing to see. Now we have a slightly more positive market situation. Has that changed anything in terms of Bitcoin dominance?
Yes, it has changed something, but not so fundamentally that we now have to explicitly demonstrate our dominance again. We will take that up again when something really obvious happens. We can deduce that here now. Bitcoin has naturally moved positively, as we have just seen in the daily chart. Similarly, Ethereum has performed well, and of course number 3 has performed even better. The bottom line is that Bitcoin's dominance must have declined. But not so significant that you could say we absolutely have to look at it now. When the corresponding drop comes, we'll be back in the game, and then we'll have our dominance back too.
So let's pass the time with what is changing, albeit only letter by letter, namely the schedule. And then we'll go back to the 2 possible rallies, the 2 rally types. You haven't changed the schedule too much, but that still means that you can now sense a slightly positive mood here, right?
Well, Johanna, we had Christmas week when we performed here. Then we had the week between Christmas and New Year's Eve week, and now the first week. That's 3 weeks. You can't expect the world to be turned upside down, the timetable to turn green, or the crypto world to be turned upside down. You have to be patient and be happy about every little step. And the roadmap from the 6th first, what did I change? I have the all-time hype of the Dow with the date entered, the 5th first. I didn't write no new all-time home in lowercase because everyone knows that it's actually a positive thing, a new one. But I made a mistake there because I said that that won't happen again. Dixie is falling, as we just saw, not quite into the target zone yet, but doing quite well. Gold and silver are stagnating a bit at the moment. We also saw clearly red candles, which are now being compensated for again. We'll have to see which way it goes, whether it continues to rise or falls. Then, after the US indices here, is the Bitcoin block. Sure, red for time. Target range Q1. The first green bar has been fulfilled, and in the second green bar I did the following. I assume this because it is supposed to be my roadmap. I assume that we have seen the higher low with a high probability at 80.5. That is why I removed the question mark. And I further assume that we will have a continuation rally, i.e. a continuation of the trend. Certainly not in a straight line upwards, but rather in a zigzag pattern, but there will be a trend continuation towards the final targets of 140 to 150. I have already made the F green for FOMO, because what we are seeing in the market at the moment is that opinions and charts are popping up everywhere. That's great. And now it's taking off and the bull market is picking up speed again. Well, you can certainly tell. The negativity is easing up a bit. We just talked about the dominance of haulovers. And what I also did was turn the meme coins green, because what we saw these days was that, of course, an XRP made 30 in 5 or 6 days. But we also saw that Bonk, for example, made 60 in 3 days. And there are several other meme coins that are really interesting percentages. Price increases where you say, oh man, look, there's movement, XRP is moving, but they're still moving. Much more vehemently upwards. And perhaps this is a first sign that people are willing to take risks again, pumping money back into the market and starting where they expect to see the best performance. So very interesting. That's why the M is capitalized and why the information is also included here on the audio track in connection with the timetable.
You already mentioned it. Your roadmap, your plan, not investment advice. And part of your plan is, of course, that you assume, as you just described, that things will gradually improve with minor setbacks, but that the overall trend will be upward. The other camp, the other type, the rally representatives are those who say that there will be a brief relief rally and then the whole thing will collapse. Let's take a closer look at these two different types of rallies.
Yes, I think that came across in an interview today. That's the central question in this whole story. What type of rally do we have with our cryptos? There is the relief rally, the recovery, we just saw that. It rises again to SMA 50 weekly and then falls down. There was initially another attempt, but it fell completely flat. However, after the introductory days this year with this recovery, it is fair to say a relief rally is possible. Up to SMA 50, perhaps even as high as the retracements in Bitcoin, as we have seen, before the rollover comes. So no final all-time highs will be recorded. Option 2, we have a continuation rally, i.e. a trend-following rally with higher highs and higher lows up to a final all-time high. These are the two types of rallies. Development types that we now have as possibilities. With regard to the US indices, the question is, which of these two types answered? The question has been clearly answered. We are in a continuation rally until the final all-time high. We are writing all-time high after all-time high. We saw this with the Dow. We saw this with the S&P. The Nasdaq and Russell still have a little way to go, but the two big ones, the Dow and S&P, with the S&P being the largest, have already shown the way. So it's perfectly clear that we're not talking about a recovery, but rather a trend continuation to the final all-time high. The situation is different for our cryptos. There is this question. And we have to be fair about it. That's why I made it very clear again in the weekly and monthly presentations. There are arguments for one thing, there are arguments for the other, and we have to be very clear about that. Be very, very careful. Observe day by day which direction it might swing in. We only have a relief rally to 94.5, i.e. the upper edge of the range or a little higher, to the retracements. And then we'll buckle. We'll have to wait and see. However, this will be decided in the short term. Or if we break through, then in my opinion, we will see a trend towards the final all-time high, which we expect to be between 140 and 150. Both scenarios are possible for cryptocurrencies, but no one has to wait that long for a decision. In my opinion, this decision will be made within the next 4 to 6 weeks, depending on which direction things go when we have one story or the other. Here, it's already clear. It's still open. So, from that point of view, even if I sound like a broken record, we are currently in an absolutely crucial market phase for cryptocurrencies. And you have to be aware of that, and anyone who makes the wrong decisions or is careless and says, I'll just let it run its course, can lose a relatively large amount of money. Amen.
Dear Oliver, amen. I think that's a good closing remark. We've examined everything and classified the positive annual mandate accordingly. As you said, we shouldn't get carried away by this euphoria. We need to continue to keep a close eye on the whole situation. That's what we've done today, and that's what we'll do next Tuesday. Thank you very much for today. Dear viewers, today is a public holiday in some federal states. Best regards to our colleagues in Kulmbach, and I hope you are enjoying yourselves. We are, of course, still here for you. There is a lot to report because 2026 has gotten off to a great start with new all-time highs, including here on the German market. We will, of course, be reporting daily for you, and I look forward to seeing you again next Tuesday at the latest, but preferably sooner.